Coming up on Market to Market, a report card on water quality. More tariffs go into effect. The fight over busting the swamp to farm a few more acres. And commodity market analysis with Don Roose next.
What's next doesn't happen by chance. It happens when researchers and farmers work together to solve tomorrow's agronomic challenges. We're committed to creating what's next. Because a pioneer, our name is our mission.
Family owned and operated for more than 60 years, Sukup Manufacturing is a full-service provider of grain handling, storage, and drying equipment, helping farmers feed and fuel the world.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.
This is the Friday, August 8 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Paul Yeager. This week, President Trump made good on his threat and raised tariffs on more than 60 countries that have yet to make a deal with the U.S. Tariffs on imports now range from 10% to 41%. Stock markets around the world took the change in stride. Now, there would appear to be some progress in leveling the playing field with other countries, but economists say there is a cost. The U.S. trade deficit, a comparison of the country's total imports and exports, narrowed in June on a sharp drop in the import of consumer goods. The trade gap with China shrank to its lowest level in more than 2 decades. But there is a 30% tariff on goods entering the U.S. and a 10% tax on goods going into China. Last week, the second quarter GDP figures were higher as front-loading by wholesalers was recorded, aimed at avoiding the increased import duties. As spring rains came to Iowa, the nitrate level in the rivers that feed the capital city's drinking water supply began to rise past the EPA's mandated maximum. Action was taken at the water treatment plant, but the increased level raised some concerns. Multiple rural and urban sources were blamed for the increase, but one study put agriculture front and center. Peter Tubbs has more.
This week, 4 scientists who contributed to the Central Iowa Source Water Research Assessment presented the results of the study to the public. The project was commissioned by the Polk County, Iowa Board of Supervisors to assess the water quality of the Des Moines and Raccoon Rivers. The rivers serve as drinking water sources for 600,000 people in the Des Moines metro area. The assessment identified agriculture as the dominant source of nitrates in the water.
You might ask, well, where's all the nitrate coming from? It's a good question.
The Central Iowa Water Works has struggled to remove enough nitrate from the source water to provide drinking water for the public that meets EPA standards for nitrate. The water utility instituted a residential lawn watering ban for several weeks to ensure it would be able to provide safe drinking water to the community. Central Iowa has experienced high nitrate levels in its rivers for decades, and the Central Iowa Water Works spends upwards of $15,000 per day removing nitrate from the water it sources. The assessment estimates that 40% of the nitrate in the 2 rivers is from surplus fertilizer, 20% from animal manure, and 20% is fixed in the soils by soybeans.
This is not an anti-farmer. We need every acre treated. We need every acre. Pick a menu of options. We know what works. We are rewarding a small percentage of our landowners for doing the right thing. And without regulation, we can't get the rest of the folks to do something. And let's just all apply fertilizer at agronomic rates.
Iowa Secretary of Agriculture Mike Naig believes that voluntary practices are the best path to lowering the nitrate load in the state's rivers, and that farmers are going to need taxpayer support to improve their practices.
If you want to see lasting change and you want to respect the fact that every farm field is different, and certainly every state and region is different, that the way that you do that is by providing technical and financial assistance.
For Market to Market, I'm Peter Tubbs.
The Swamp Buster Rule is a provision in the 1985 Farm Bill that promotes conservation practices. The idea was to preserve untouched wetlands to filter runoff and help with flood control. The penalty for non-compliance is a loss of federal farm benefits. This provision has been called federal overreach and a violation of the Takings Clause in the Fifth Amendment of the Constitution. We partnered with Great Lakes Now, which is produced at Detroit PBS, to tell the story of one landowner who challenged Swamp Buster and the farmers who rallied against that challenge. Greg King has more.
John Gilbert is a fourth-generation farmer. He and his brother Greg raise hogs, beef cattle, and soybeans on 800 acres of land in Hardin County, Iowa.
In this era, when we have virtual this and virtual that and virtual just about everything, the land is probably one of the realest things we have. And it is really something we need to be cherishing because, quite frankly, all life on Earth depends on how well we look after our soils.
Nearly 120 miles to the east, Steve Besler and his wife Ellie Gadet own a farm near Worthington, Iowa.
I grew up on my family's farm, about 20 miles southeast of here.
It's something I've always loved. My first task as a kid was to pick eggs. And from there, we went to bottle feeding calves. We dairy farmed and raised hogs growing up. Farming's been in my blood, and it's thick as can be. So there's no getting the farming out of me.
It's safe to say that for Steve, Ellie, and the Gilbert brothers, farming is a way of life. But there's a pending court case that could impact their way of life by stripping away what many environmentalists consider to be the last guardrail against the destruction of precious wetlands. The case is CTM Holdings, LLC versus USDA, and the guardrail is a provision in the U.S. Farm Bill called Swamp Buster. Katie Garvey is an attorney with the Environmental Law and Policy Center in Chicago. She's intervening in this case, representing Iowa farmers.
I don't have any reason to doubt that the plaintiff feels genuinely and subjectively aggrieved that he's not allowed to do whatever he wants with his land and get free money from the government. But that is not a legally cognizable injury. We might call that feelings, we might call that opinions, we might call that entitlement. It's not a legal injury.
Jim Conlon, a hedge fund manager in suburban Chicago, is challenging Swamp Buster by suing the federal government. His investment firm, CTM Holdings, owns more than 1,000 acres of farmland in Iowa. The land at the center of this court case is a 72-acre parcel near the small town of Delaware, Iowa, population 140, which Conlon rents out to a local farmer. About 9 acres of that land are considered wetlands. Under the Swamp Buster provision, the USDA pays Conlon in the form of subsidies for not plowing those 9 acres. Conlon argues that the Swamp Buster provision is unconstitutional.
And the reason I say that is because the federal government prohibits it from being used for anything that has any economic value at all. You can't farm it, you can't build on it, you can't clear it, take the stumps out of it, and the underlying land is probably worth $20,000 an acre if you could. It's worth zero, it's actually worth less than zero.
But Swamp Buster is purely voluntary. So why doesn't Conlon just opt out of the program?
You couldn't participate in any of those programs. That would make it difficult for a farmer to rent that land because the federal government's involvement in agriculture is pervasive. It's difficult for a farmer, a renter, for example, to operate without USDA supports.
Conlon maintains that the 9 acres of wetlands on his property are not always wet and are not connected to any other body of water.
I've never met an actual real farmer that has anything good to say about the wetland laws and regulations. They despise them. I don't know who the hobby farmers are that are near there or what environmental groups they're part of. But if you interviewed 100 farmers in Iowa of various sizes, I don't think you could find one out of that typical 100 that would share that view.
Gilbert and other farmers are concerned about increased flooding on their farms if Conlon wins and Swamp Buster is overturned. Wetlands slow water down, storing floodwater and preventing it from inundating farms, homes, and riverfront towns further downstream. That's why Steve and Ellie are concerned.
We're downstream from the land in question in this lawsuit. We're about 12 miles southeast of this wetlands in question. And this is far greater than one stream and one wetland in Iowa. This directly comes down and affects us and affects our neighbors.
A recent study conducted by the Union of Concerned Scientists found that 30 million acres of wetlands in the upper Midwest, including the Great Lakes region, provide nearly $23 billion in annual flood mitigation for homeowners. Over the long term, the study estimates that protecting these wetlands could prevent between $323 billion and more than $700 billion in residential flood damages in the upper Midwest. But for Conlon, this case comes down to the rights of landowners.
I'm pro-environment. I'm pro-collective action, but I'm also pro-property rights, which is if you're going to take from me for the benefit of society generally, including me, you have to pay me.
For the farmers fighting to keep Swamp Buster, the lawsuit hits closer to home.
Those of us who work the land, we leave footprints and shadows on the land. You know, the ethic we have, the relationship we have with the land is totally foreign to a lot of the outside people who are coming in and basically prostituting the land.
On May 29, 2025, a federal judge ruled against CTM Holdings. CTM said they planned to appeal, but no appeal was filed before the July 28th deadline.
Next, the market-to-market report.
Okay. Increased export demand helped, but was not enough to overcome ideal weather and a larger than expected private estimate for the corn crop. For the week, the nearby wheat contract fell 2 cents and the September corn contract lost 7 cents. Limited export business kept the soy complex lower for much of the week. The September soybean contract weakened 2 cents, while September meal improved $5.70 per ton. December cotton expanded by 24 cents per hundredweight. Over in the dairy parlors, September Class 3 milk futures gained almost 9% or $1.50. The livestock market was higher as October cattle, well, they were up $2.30. September feeders put on $6.45, and October lean hogs found 63 cents. In the currency markets, the U.S. dollar index dropped by 91 ticks. September crude oil contracted by $3.33 per barrel. COMEX gold gained $59.70 per ounce, and the Goldman Sachs Commodity Index was down by almost 8 points to settle at $539.10. Joining us now, regular market analyst Don Roose. Hi, Don.
Glad to be back, Paul.
Don, there was a conversation with some farmers this week was about the end user. Is the end user's time? Let's specifically talk about wheat. Is this their last hurrah? Because that means we've got the low end. That's really what everybody wants to know.
Well, I think when you look at the wheat market seasonally, this is a time of year where you can put in a bottom. So I think it is trying to forge a bottom. Paul, last year, September wheat forged a bottom, $4.94. August 26th this year. So far, we've had a low of $5.04. Carryout's very much similar. Support on the downside, but rally still run into a lot of resistance because we get too competitive.
Well, competition has been part of the story here. We'll get to exports in a moment. I mean, I guess has the export train coming for U.S. grain, U.S. wheat, that is?
Well, it's just competition. I think we got to be the cheapest wheat in the world, cheapest corn, and the cheapest soybeans. But then when you rally just a little bit, we become uncompetitive. It's that tight of a market. So I would say and that's what you mean when you're trying to forge a bottom. It's one that takes time to build a base.
Well, you see there on the December wheat chart, and when we're going to show you the corn chart here in a minute, because you talk about the exports, this old crop, there is still this optimism that it can't get much lower, can it?
On the corn market?
Yeah.
Yeah, I think when you look at the corn, it's last year we bottomed at 360.5 on September corn, so we're well over that right now. So far this year we went to like 370, just over 375. So the timing, last year we bottomed August 24th, so you're in that window that you could, but I think it's one of these markets, Paul, that we're trying to see where end user demand really picks up. We're trying to see, when these spreads start to narrow in a little bit, when old crop supplies get cleared. So I think it's just one of those that takes time. It's the wrong time of year to be overly positive on the grain market going into harvest, Paul.
We've not been overly positive about the grain in a little while there, at least the ones that I talked to at the Iowa State Fair this week. In Iowa, there's an estimate, more than 220 bushel to the acre for Iowa alone. Then I talked to these farmers who whisper the 3. There's a big crop out there, this new crop. What's the biggest pressure? Where is it coming from with new crop right now?
Well, I think partly it's old crop supplies are being cleared. We've got pressure from the south. The Delta's starting to harvest corn. They probably harvested so far 70 million bushels. Put it in perspective, Louisiana's about 25–30% harvested. So we're getting pressure from that. But at the same time, on new crop, you're seeing very limited selling here, Paul. For a lot of people, you're down at below break even, so it's kind of a caution on making new sales.
But then the exports came in Thursday, kind of gave us a little spark. But then it didn't last very long, like you were saying. Once you're no longer the cheapest, it quickly ends. How do we get back to having more interest in the export business?
Well, and that's exactly right. I mean, the dollar has to keep coming under pressure. What we've seen is our new crop export sales have been very good on corn so far, but that's mainly because people pre-buying because of the tariffs coming on place. But, exports could be well overstated in corn and on soybeans. A lot of it's going to be dependent on what happens with trade and these tariffs going forward. It's very much an unknown so far, Paul.
Tuesday is a USDA report. It is on acreage, or we'll find out how big this crop is, or at least the estimate. What are you thinking? What should a farmer be doing Monday, Tuesday ahead of this?
Well, I think from a producer standpoint, really, you're down to, on new crop, you're just kind of in survival mode, really, when you're below the cost of production. So you have to market for dimes, not dollars, right now. So that's the big one. I think you have to be careful of big carries in the market. I think the big thing you're looking for is how big is big on these yields, how low is low, and those I think will lead you home. But last year, remember, could this happen again? The highest yields of the year were in the August report, and we went lower throughout the year into the final. This year, what's it going to be? We saw some big private estimates come out, but also we are also hearing some concern. And a lot of producers tell me when you have a lot of moisture, you get a lot of denitrification, and don't bet on the big yields like we're all talking. Iowa's the epicenter of the big yields, Paul.
Yeah, and my 220 number was a private estimate that I used earlier. But Mitch in Iowa, who's in the northwest part of the state, he wants to know at what price level does the risk-reward trade-off no longer favor the funds holding their short positions on corn?
Well, let's put in perspective on the funds. Let's just say they're short about 160,000 contracts. The record is about 360,000. So there's more meat on the bones if they want to press it, let's put it that way. So I think from a fund standpoint, you have to prove that the market can quit going down before it goes up. And just like we saw here to end the week, we had a technical turn to the upside, key reversal in wheat, spike bottom in corn, soybeans. We rally up to resistance levels, could not clear over some of these downtrend areas, and boom, you slink right back down because it's the weight of the market, the weight of the harvest. The end user, when you have a big crop out here, is not in a hurry to buy anything yet. So the answer clearly is you have to reach an area where you spook the funds for some reason. Smaller crop, something, a different trade policy. So haven't seen that yet, Paul.
You talk about trade policy, you mentioned it earlier. Let's talk about it heavily with beans then, because there's one country missing from a lot of these reports. We still haven't seen China come in to the marketplace. Is that what we're waiting for a rally here?
Well, let's take the soybeans clearly. I mean, the soybean export pace could be 250 million bushels too high. You could have a carry out over 600 million on the soybeans. China has really been just absent. They've been buying soybeans out into October, November from Brazil. That's our market. So the longer this goes on, the more they're getting comfortable. It's risky for China when you're lining up with one client, you know, so that's their risk. So we'll see how these trade negotiations go. But exports, slowest number for new crop soybeans since 2021.
So if I'm sitting there, use the weather story in addition to this trade story with my new crop beans, what's my course of action here in the next couple of weeks?
Well, I think on new crop soybeans, I think, you know, clearly the thing you're really looking at is, do I want to pay storage and carry this market with an 8 cent a month carry from November to July? You know, like we were talking earlier, you're in survival mode. So if you're selling stuff below the cost of production, which, you know, it's for a number of people it is, you have to do something. Encourage calls, give yourself a chance. Remember last year, back to the corn, we hit low of 360.5 on September corn, but then in March, or in February, March corn went to 521.5. Could it happen again? We'll see once, you know, it's just an issue with demand picked up a little bit and the yield was too high in August.
Too high? Live cattle too high right now?
Well, I think when you look at the cattle market, you know, it's a spooky type of market because we're very high. We have not had in this whole cycle, we have never had a week where Monday we went down the limit on cattle, 725. To end the week, we went down 925 on feeder cattle. So we've never had live cattle, feeder cattle go down limit in 1 week. On Monday, expanded limits on cattle, so it's going to get a little wilder. 1075 on fats and 1375 on feeders.
In the feeder market then, with that volatility increased, does that mean that when you mentioned, you know, shaking the confidence of a trader, is it, with a big number usually is what shakes someone's confidence. Is that what's going to take to maybe change this trajectory of the feeder market?
Well, what I've been telling people is it's very much like we're trading, you know, $9 plus maybe $10 corn. You're at that number on live cattle. So you want to be careful. Break-evens on a lot of these cattle are 220, 222. A lot of risk here, Paul. You know, you got to be very careful. Black swan can happen. You never know. And consumer can back off anytime. Packer losing, you know, a lot of money right now.
Well, the consumer, there's a big concern finally that may have come to roost with this cattle market, that the consumer is maybe finally speaking and walking away from the market or from the counter. Are you seeing that, hearing that?
Oh yeah, most definitely. I think, you know, it's not quite the same. It's not getting quite the publicity, but remember when we had the egg prices so high, you know, a lot of chatter there. We're starting to hear the same thing on cattle. You know, you're seeing some of the ground beef where you're mixing beef and pork together. So you're seeing some strange things that you haven't seen before. And I always remind people, you know, the person that's really in control ultimately is the packer, because he can back away from cattle. They're cutting these kills pretty fast. It's you know, very, very dangerous market up here. I don't think, you know, most people in the cattle business never thought you'd see these kind of numbers, Paul.
And for this long. I mean, the length of time that we've been talking about this, and the same with we need to move to hogs for a minute, but hogs have kind of rallied now too. Is this a correlation with beef or independent? What else?
No, I think it's partly, you know, the Me Too type of attitude. And like we were saying, you know, the cattle kind of pulled it up. But we've had disease problems with the hogs, and so the numbers are down. But our export pace is very strong, and bellies are the highest they've been since 2022. So it's demand underneath the market's helping us. But fourth quarter, you have to be careful because we'll see what the supplies are and the demand is, and particularly if cattle happen to stall out here.
Final seconds between, again, the highs in on these livestock. I mean, what can run us higher besides the black swan event?
Well, you know, at tops and bottoms of markets, Paul, my experience is that's when you accelerate, you put the most gains on. Is that what has happened in the cattle business? You know, like I say, when you start to see cattle go limit down, they can hold it, but you got to start to, that's a warning sign for the bulls.
All right. Thanks, Don. Good to see you.
Thank you, Paul.
Don Roose, everyone. And you have been watching the analysis segment. And in a moment, Don and I are going to continue our segment in a thing we call Market Plus. Search Market Plus with Don Roose wherever that you get your podcast to hear that conversation, or you can go onto our website of markettomarket.org. We do want to thank you for your loyalty to us on Facebook. Give us a follow or search out facebook.com/market-to-market show to jump back into that site with us. Next week, we look back at the most recent decade of this program. Thank you so much for watching. Have a great week.
Market to Market is a production of Iowa PBS, which is solely responsible for its content.
What's next doesn't happen by chance. It happens when researchers and farmers work together to solve tomorrow's agronomic challenges. We're committed to creating what's next, because at Pioneer, our name is our mission.
Family owned and operated for more than 60 years, Sukup Manufacturing is a full-service provider of grain handling, storage, and drying equipment, helping farmers feed and fuel the world.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.